Hi everybody and welcome to the True Potential Do More With Your Money podcast. It is episode 210 and as hopefully is getting routine now, I'm delighted to be able to present the month that was at True Potential. If this is the first time that you've watched one of these videos, it's a chance for me just to give you a bit more flavour about what we do at True Potential, where we look after financial advisors, we look after clients, we run money, we run the websites, we run everything to do with your money, and that gives us a chance really to talk a bit more today. And to talk a bit more about that, I'm delighted to be joined by Neil Rayner, who is our Head of Central Advice, George Bell, who's our Portfolio Manager, and Diane, who's our Head of Delivery. And I obviously got you out of sync there because I was looking at the list here. But welcome, guys, and thank you for joining me today. Before I get into maybe a couple of your specific areas, as you can guess, ladies and gentlemen, by the different rules I've introduced there, the team know everything there is to know about True Potential. But before I maybe delve into that a little bit, let me just give you a bit of a summary about the month that was in February. There was nearly £480 million of client money invested into pensions, into ISAs, GIAs and offshore bonds and everything else from there. So a fantastic month, and thank you everybody for saving with us and for trusting us with your short, medium and long-term futures. We now look after 517,000 clients, which is a real privilege. Every pound, you've heard me say this before, but every single pound we look after at True Potential is a privilege. So to have 517,000 people who trust us in that way means the world to us. And that meant we actually tipped over a significant landmark at True Potential. We now look after more than £30 billion of client assets, which is something we've been thrilled about, something we've really, been at for 17 years. We're into March now. True Potential is now 17 years old as well. So to reach that milestone of 30 billion means a lot to us. And please note, we never take that for granted. And hopefully you'll get a feel for that, certainly when Neil and Di are talking about the way we look after our clients and indeed the technology enhancements from there. But maybe before we get into that, let me hand across to George, because obviously there's no point, George, looking after £30 billion of assets if we can't help our clients grow. So what was February like?
It was another good month for portfolio returns. If we look at the balanced portfolio, up 1.6%. If we look at the aggressive portfolio, where you've got more stocks and shares in there, that was up 2.9% in 1 month, and that's after the portfolio charges are deducted. If we look at what was happening in markets in February, it was a very good month for equities. If we look at the global equity market in sterling terms, that was up 5.1%. But it was quite concentrated from a regional, but also from a sector perspective in terms of where you were seeing that growth. The US was the strongest performing market. That benefited from the larger exposure which you get in the US to technology businesses, which are reporting very strong earnings for their fourth quarter of last year, but also the expectation as we look ahead, some very strong earnings growth are expected to come through there, particularly those names which are linked to the artificial intelligence drive. You may have heard us discussing the Magnificent Seven, which is 7 stocks within the US, includes Microsoft, Meta, Nvidia, Tesla. They drove around 74% of the returns in the market so far this year. But what we're expecting as we look through to the rest of 2024 is to start to see some acceleration in terms of corporate profit growth, but also a broadening out from a sector perspective as well. And it appears that the strength of the US economy, but also the strength of corporate America in terms of profit growth is really taken centre stage in the market's mind over and above any challenges which we see to the inflation moving closer towards the target. So as an investment house, we've been constructive on equities, we've been constructive on the US equity market and Japan, and both of these regions, in our decision to have an overweight to those regions, was beneficial to us. What wasn't just limited to the US in terms of where you saw positive returns. We saw China, which had a bounce back, partly because of the stimulus which the government had put in place to reduce mortgage costs, but also some structural dynamics as well. Their efforts to try and limit the extent to which hedge funds have been able to short that market. So there's a technical dynamic in there as well, and positive returns out of Europe and the UK, albeit slightly weaker in terms of the returns there. The bond market was a bit more focused on what we saw, which was inflation, which ticked up slightly higher in economic growth, which was stronger. And when we couple these aspects together, essentially what that did was just pushed out the timing of interest rate cuts in terms of when we expect them to come through. So you saw government bonds, which were negative over the month. Corporate bonds fared up a little bit better, but it was equity markets where you really saw that strength come through. But I think we're at quite an interesting point in markets. You're seeing economic growth, which is pushing out any risks of recession. You've got inflation, where albeit volatile in terms of the prints, the trends are very encouraging. We're heading towards the 2% targets, and that's bringing down the volatility across asset markets. And it's actually driving back in the correlation that we want to see, which is typically a low correlation between equities and bonds, because that, for a multi-asset portfolio, helps bring the diversification. But thankfully, within the True Potential portfolios, we're not just limited to equities or bonds or one single region. To get the returns, we've got the blend, which means that even in times where you do see a pickup in correlation, which means bonds and equities are moving similar directions at the same time, we can use other tools and instruments to help navigate that for clients.
Yeah, and we obviously had some of that negative correlation post the trust budget,
Exactly.
etc., which leaked into the rest of the world as well, I think. And Neil, if we maybe just put you on the spot slightly, so a lot of your job last year was working with George and the investment management team, I think, to really encourage clients to stay put from there. So it must be nice having different conversations and sharing things such as a 2.9% return.
Yeah, definitely. It was a different time this time to last year, where there was a lot of volatility in the market, and there was some concerns from clients. The main focus that we have in this tax year and towards the end of the tax year is really about investing more. People talking about allowances, how much can they put more into their ISA? Obviously the app tells you, but a lot of people like to give us a call. How much can they put into their pension? And just generally more positive conversations than we were having last year. I think there's a hell of a lot of calls which were happening last year which aren't happening this year, and that was all down to the volatility in the market. But as we know now, there's a lot more positivity, which is reflected in the growth of the portfolios, as George has just been talking about.
And it comes through in terms of what we've been doing within the portfolios, putting more money into the market in terms of where we see opportunities in the equity market, also the bond market as well. We focus quite heavily on government bonds at the start of the year. We've seen strong returns there, and we've started to move into the corporate bond market where you get some very attractive yields now. So it's about us actually actioning this for clients as well, taking that decision to move up in terms of risk when we see a better outlook for multi-asset.
Well, absolutely. The balance at a 1.6, the aggressive at a 2.9 is a great return. And maybe if you wouldn't mind just almost humouring me a little bit, George, because I was asked by somebody at the weekend, well, it's 2.9%. But cash gets 5% or what have you. And I was trying to explain to this gentleman about the effect of annualised growth. That's 1 month, but you stretch that out. Could you maybe just explain how that works a bit to clients?
Yeah, so on an annualised basis, since we launched in October 2015, we've exceeded that 5% return for the balanced portfolio, and that's even after you've taken off the portfolio costs. If you were to take more risk, so if you were a longer term investor willing to take more risk, the annualised returns being 7.9% during that time. And if we think about that time, you've had a pandemic, you've had China-US trade wars, you've had the fastest interest rate hiking cycle in history, along with some good periods as well. But when you balance all of this out, remain invested, you can see that there's been real benefit of being in the market during that time.
No, and we've talked about this before, but that 7% growth rate over 10 years doubles your money as an investor as well. You can imagine the power of doubling, within that 10-year period, and the positive impact that has on your pension, for instance. What a great kind of result to look back on.
Yeah, exactly, and it's all about looking forward. If we look forward, we are very constructive in terms of the outlook. We see this as a good outlook, a good environment for multi-asset portfolios, an environment where you've got strong economic growth, you've got inflation which is coming back down to target. The risks of interest rates going up from here are very low. The trajectory is more likely interest rates coming down, and corporate profit growth is very strong at this point in time.
Yeah, no, it's good to hear good news. And Diane, I think we've talked a lot in the past about how our clients can log in, they can use their app, they can use the website, and, you know, thrilled to say, you know, there was 863,000 individual logins last month using the technology which you and the team build there, which obviously lets you look at your valuations, lets you get in contact with us.
Yeah.
But what we're also doing is we speak to Neil, we speak to George, we speak to our clients, we find out what do our clients want next. Yeah. So did we build anything exciting in February?
We did. I don't know whether you would call it exciting, but I think if you take the numbers that we're bandying around, we've got 517,000 clients. They're 517,000 individual circumstances.
Yeah.
We've got £30 billion worth of cash to look after that we're responsible for. And I think while it might not be exciting, I think what we kind of take for granted is what we do behind the scenes with the client data. So there will be clients that have people that help them manage their circumstances, such as power of attorney. That was one of the things, while we've always had information in the background that allows advisors and the head office guys to take account of a client's circumstance, we've just made it a little bit more prominent that the client might have somebody that, like I say, is assisting them with their finances for whatever reason that might be. So the power of attorney markers, we've made them much more prominent. The call takers and the call handlers will be able to see at any point in time when they're on the calls with the clients that somebody is available in the background to talk to should they need to. And they also have permission in order to look after the client's circumstances and make decisions on their behalf. So I think it's probably worth mentioning because, again, big numbers, you kind of can get lost and worried in the circumstances around what's happening with people's finances. Outside of that, we've got enhanced client markers on the system as well. So depending on, there's certain tasks lists which will fire off automatically to certain events, trades and things that will all happen in the background based on certain circumstances. Those markers are also available much more prominently within the client side of things at the, I suppose, in the back office system, rather than just available to a client via their
I think all this is really useful, Diane, because I think we've all been on the end of phone calls or help desks in the past where you're almost trudging through questions and answers, which you feel like you've had that conversation before, you've recorded that information. To put my selfish boots on and use myself as an example, I cancelled a phone contract the other day. It was something I used for data rather than the phone, so I didn't have access to be able to dial off the number, and the hoops I had to jump through to answer questions about something I just wanted to cancel. And you kind of walk away thinking it would have just been easier just to actually go in the bank, cancel the direct debit and just deal with the mess afterwards. So again, I think this is where it's useful at True Potential because we're all end consumers, not just of TP but of other things. So when you have annoyances like that, you think, if I'm a client of True Potential, I don't want to go through that.
No.
You know, so having information about power of attorney, what frankly could be a really traumatic time, either for yourself as an individual or more likely your family, you don't want to have to drudge through records. You know, to get the right person who can help and give information there is a boon to everybody involved. And the same with those markers as well, Di.
But it doesn't have to be a bad thing. Like, my dad passed away in 2019. And again, my mum didn't necessarily want to have to deal with all of the admin that comes with that. Had I not been power of attorney, just for those reasons, she would have had to go through the trauma of losing somebody like that. And again, a power of attorney doesn't have to be a bad thing. It doesn't mean somebody has to take control. It is just that person that you've got there that people like ourselves know that actually you can talk to that person on behalf of somebody else.
I think there's a lot of good control that we give to clients through the app, through the tech. The one that springs to mind for myself was the introduction of basically making your own appointment via your mobile. You know, you can open your app, and if you wanted an appointment with a financial advisor, your team built that, you know, about 6 months ago, and it's proven to be very successful because not only does it allow you to choose the date, the time that you want that appointment to speak to a financial advisor or to customer care. You can just do it straight away from your mobile, and it goes straight away into the advisor's diary. And that is really giving the client cutting through all that rubbish of press 1 to do this, press 2, you know, and just to do it straight away.
Where you've got your calendar open as well, and you're speaking to somebody. Can you do the 17th of this at this time? No. You know, you just want to be able to click it and choose it yourself. And again, I think the reason why we're probably seem like we're doubling down on something kind of which may sound basic to some people, I think it's really important for everybody to know that we build our own technology, we are our own clients, but indeed we do listen to other clients as well, which allows us to improve things for us and for the end consumer who's not a TP employee as well. So
we don't want to build features that people don't want or they don't want to use. Some of them are regulatory, and largely we have no choice, so we have to make something available to an end client. But outside of that, you're right, we have various meetings around the building where we talk about, actually this feature was rolled out 2 months ago, 6 months ago. Have many clients used it? Yeah. How long does it take for the page to load? There's a lot that goes into what we do in order to try and provide the best experience for 517,000 individuals. Yeah. They could log on every hour of every day if they wanted to. We want the system to be operational 24/7. So like you say, don't have to go through the rigmarole of, actually I can only contact these people between 9 to 5. I work 9 to 5, so I'll have to use a lunchtime. No one's available. We try and give them everything that they need in the palm of the hand.
And I think a great point about that is that when we test that new spec, it's clients, as in us, staff, who test that. Yeah. So we know exactly what we want out of it and we can build it accordingly.
Yeah. And flashing across to you though, Neil, you and the relationship management team. So obviously, for those who don't know, we have a two-tier system when we look after clients centrally. Yeah. We have the relationship management team who actually deal with the bulk of our queries. Mm-hmm. But then when something needs to be a bit more technical or strays into advice territory, you've got yourself and the advisors as well. And I'm just looking at some of the stats there, Neil. There's some tremendous kind of volume and ways in which we've engaged with our clients over February.
Yeah, I think we're very attentive to, looking after clients. If you look at some of the stats there or some of the stats that are banded around the building, everything is focused towards the client, everything, this client has to be called today. They need to take some money out. They've got an emergency. Right, okay, getting an advisor's diaries as soon as possible. But also as well, I've locked myself out of my app. Can I reset my passphrase? That's done by the relationship management team. So you've got to...
You were using the wrong app, weren't you, at once?
Yeah.
Because me and Jamie were laughing, because apparently you'd send a message through saying the app's not working.
Oh, yeah, to skip to the upgrade. Yeah, Jamie got us on that
new
one.
App, yeah. So.
But it's all focused towards clients. And I feel like, whether or not you need the simple things, like you want to log in, or you want to, talk to an advisor for some more in-depth financial advice, you've got that good hybrid mix there. And like I said, the focus has always been from a customer care point of view on getting that query sorted quickly for the client.
Yeah. And has there been, we mentioned a bit about the positivity in terms of markets, which George shared the information from. Has there been other things clients have been asking about in February and into the start of March?
Tax year end always throws up loads of inquiries about, how much ISA allowance have I got? Can I put some more money into my pension? The benefits of doing so. And people might think, shall I fill up my ISA allowance or shall I fill up my pension? Which one do I need to put my money into? And that's where an advisor can help, because you can talk about the tax incentives of putting it into a pension. You can talk about how it relates to your earnings. And you can also, if you're going to withdraw money, which a lot of people do at tax year end, and renew their annual drawdown, which is the amount that they're taking out of the pension, how is it going to impact your personal tax allowance? Yeah. These are all questions that come up, and these are all questions that can be easily identified by the financial advisor.
Yeah, and that'll probably come pointier still as March progresses. It tends to be a very busy time the next 2-3 weeks for us.
Well, people's lives are busy. I mean, you think you're working in this cocoon of true potential, and we all live and breathe it every day. But you've got to realise, a lawyer, an accountant, a teacher, anybody really who is busy in their normal life might not have time to do it. So you tend to find that a lot of people try and do it, through the year, but a lot of people do it last minute because they've all got busy lives. And that's why we sort of really look at the resource from that point of view and have people working extra hours just to help those clients service over tax year end.
Oh, sounds good. Well, good luck the next couple of weeks.
It'll be busy.
from there. And I think, before we sort of wrap up, and I'll ask George and Diane soon about their plans for March in terms of what their team's going to be doing and what we're looking forward to. From there, just to maybe talk about something a bit which we do around the fringes, about the community impact side of things. So we have a fantastic partnership with the the Foundation of Light in Sunderland, which is via the Harrison Foundation, but also the True Potential and all of the help which the staff give. So, Diane, you've been my wingman, so to speak, for a number of years now. We've been meeting the students there. We've been listening to their projects, listening to their ideas, and trying to mentor them through there. So, delighted to say that we've continued that extension with them. So, you'll be back on that.
Good.
Back on the run down to Sunderland.
It's lovely to see. You go into an environment like that where it's very focused on the education of people in really difficult circumstances, trying to understand what their strengths are, play to those strengths, and then give them a future outside of, I suppose, the educational piece that's kind of failed them.
Yeah.
And it's lovely to see when they present their ideas. It just blows me away that they don't really have an idea about finance and what we do. And they come up with some of the ideas that we've taken on, discussed, and have implemented.
Yeah.
Like how it's a pleasure to be involved.
No, it is, and it's. I think the big thing from there is there's a tangible outcome for those. I'll call them children. That's not going to be patronising, but they tend to be younger.
Yeah.
And the tangible outputs are they either going to full-time education or they get into an apprenticeship scheme or employment from there, which is always nice to see because often those students have been written off at that stage. As you say, Di, they've been almost written off by the system. They've been permanently excluded in a lot of cases. And this isn't just a second chance, it's like almost a last chance for them. So it's fantastic to see that. And I think we often talk about True Potential, about putting our money where our mouth is. And you know, when we look at extending that partnership now, that's going to be more than £600,000, which we put in to that one particular cause from there. And I don't say that money in terms of bragging. I say that amount just so people are aware of actually how we do use the profits at True Potential and indeed for that, the Harrison Foundation for good. Yeah. And to make big changes and big positive outcomes from there. And in link with that, we've been working with the Newcastle Eagles Community Foundation. I think there's a video coming out very soon, so hopefully it'll be either linked to in this video or followed up very soon there. But I met a member of the team just last week, a lady called Susan, and without giving too much away, it's really exciting to see what they do and find out more from them. And the good news is for George, you, Diane and Neil, we've got a basketball tournament coming up in the car park soon. We've got a Chuck a Duck game as well, which is literally what it sounds like. You do chuck a duck, but not a real duck.
I was just about to ask.
In case anyone from the RSPB rings up from there. But that's all about getting everybody at TP involved. Because no point me just talking about these causes on there. I want everybody at head office to be involved, and indeed our clients and our advisors as well. Because again, some great outcomes which come from there. And talking about outcomes, we'll move across to what we want in March. What's going to be a good outcome? George, you've had a budget just last week, which was obviously, again, plug to last week. It was myself, Jamie, Peter Bold and Chris Leyland speaking about that, but almost 3, 4, 5 days on from the budget. Any further reflections, George?
Not a huge amount of fallout in terms of markets reaction to the budget. I think markets globally are a lot more focused on the inflation data we're going to get out of the US this week, and any comments from central bankers off the back of that. I think Jerome Powell, who heads up the Federal Reserve, sort of did markets a bit of a favour last week when he was a bit more sort of acknowledging the fact that inflation's coming down and you know we could be getting closer to starting to lower interest rates, which markets took quite well. So the inflation data is going to be quite important for us as an investment team. We've got a review of the allocation of all of our portfolios. We do this every month, and it's a very important time. In the lead up to that, we'll have an asset allocation review, which is the True Potential Investment Portfolio team, who will be looking at all of the different regions and the type of exposure we want to each of those. And to help us along the way, we will be speaking to our fund manager partners, and they're London-based but also global as well. So we'll be speaking to teams across Europe and in the US to get their view on the ground. So as we head up to those meetings, we'll be using all of the resource which we have available to inform our decision.
So
we've also got
quiet month.
Yeah, we've got the investment committee next month. That's every 2 months. It's an independent panel who will be really challenging us on the delivery of the portfolios, but all of our sub-manager partners as well. So we'll be preparing for that as well.
We'll may get you back next month and you can share a couple of
give you a bit of an update,
from the investment committee.
Absolutely.
But, Di?
Well, so because I'm a bit of a nerd and we are coming up to tax year end where, like Neil says, everything does ramp up. People, again, you've got the end point of get it done before then or you lose it and you can't necessarily carry it over. I'll be looking to see where we go from 517,000 clients, how many more we make, making sure that the system is up and operational and stable when clients need it most. So I'll be looking at those numbers and just keeping a close eye on what we're doing as a team and making sure that everything that we have serves the purpose.
Yeah. And Neil, I think you've got a Centre of Vice team offsite there with me and a few others next week. So we'll give Diane a big list of
great.
nice ideas after that.
No, those events are great for us because it allows us to, as a management team, to really get together and to basically give any ideas that we want. And last year and the year before was really, really good. It gave us a lot of things that we've implemented already. It gave us a lot of great fresh ideas. And this year I might even have a pint after it because I'm not drinking at the moment. So I might have a couple of pints of Guinness.
Depends if you lose that cough.
Depends if I lose the cough, But no, get tax year end out of the way in a positive sort of format. See, how the team is progressing. We're increasing the advisory side. So we've got a lot of new financial advisors coming on board, and with tax year end, it's going to be really, really busy. But like last year, we'll get it out of the way and help clients, and then hopefully moving through to the summer, we'll all be in a better position.
You're not in a bad position. We've just talked about what we're in a good position.
No, I was just from a better position from a service and a support point of view, because tax year end's always busy.
It is busy. No, it's good. It's the type of busy I really enjoy because it's productive busy, if that makes sense. Where you are having these positive conversations with clients, you're helping them make the most of their allowances for this year, you make them set up and make the most of their allowance for next year as well. And certainly when you maybe just a kind of final thought, I think, when you look at someone like George and he's sharing those figures from there, I always say the quicker you get your money into your ISA for that tax year, the quicker you get it into pension, the more you're going to take advantage of that tax-free growth with that as well. If you're almost sitting on the money and you're waiting just for the end of March or end of tax year and start of, you're not going to avail yourself of 12 months of potential tax-free growth from there as well. So I know it's easier said than done, but I'd always urge people to save as quick as they can. Don't sit on the money. The neat thing about Impulse Save and the technology
I was just going to say that, Impulse Save,
let you pop it in as frequently as you want within your allowances.
Well, probably our strongest tool on tax year end is Impulse Save, world first, and just to be able to put some money in from your debit card to, £500 into your ISA or £1,000 into your pension is what's great about the True Potential tech.
Yeah, no. Well done, Diane.
Yeah.
And I think, ladies and gentlemen, that gives us a great chance to wrap things up there. So hope you enjoyed the update for February. I hope you're enjoying the start of March already. I think a lot to look forward to, as you've heard, not just from Neil and Diane, but importantly from George in terms of the outlook for this month and what can happen with your money from there. As ever, please do like and subscribe our videos. That way you get all of the latest updates. You hear from George and the investment management team every single day on Morning Markets. You hear now on the weekly updates show where it's typically two members of the IM team having a good discussion and digging into a bit more about what we've heard of today. So please, if you haven't watched those videos yet, do give them a go as well. And as ever, any queries, either pop an email or ring Neil and the team or let your financial advisor know, and we will be delighted to help you. Looking forward to speaking to you again next month. Thanks again.